That is DW World, and welcome back for joining us. Today is the 5th of March, year 2020, and this is Dawong here, coming back again to give you the update on US index. All right, last week we had seen the Dow Jones falling in one straight line, all right, and over a series of 8 days. In fact, we have seen the Dow Jones plunging about 5,000 points right from the top side of 29,600 down to 24,400 before it bounced back up. And sometime last week, we actually did a DW World chapter that we mentioned about on the way down, there should be some support in 27,300 that is actually confluent to the EMA 200 averaging line. But then the market broke down below this 27,300 and went down all the way to 24,700 and rebound. And based on today, we have got many trader friends who have been asking us how do we foresee the market and where is it going from here? And in fact, a lot of optimistic traders have been predicting on the sharp V rebounds and seeing that the market is going up. People start to celebrate. Okay, but in our opinion, all right, we have a few points to state here. There are a lot more intricacies in the market than to just expect a V rebound. Okay, first of all, as the market fell last week, we actually feel that this is a healthy correction because the market has been going up for past 4 years, okay, without any healthy correction, and it is not really a plunge, but this correction has been long waited, although it went down quite sharp. Right. Secondly, the global market, starting from the European market, moving to the American market, I think they have been a little bit overreacting on the coronavirus, and out of fear and panic button, all right, most of the algorithm trading software that has been input in the market trigger the sequential stop loss that actually get the market prices rolling down. Right. Talking about rebound, would there be a rebound, and what is the biggest market opportunity in March? And today is the 5th of March, and we have got another 25 days more to go. And this is exactly where we are here, why we are here, and talking to you how you can actually plan your trading strategies and get your potential profit in this month of March. Stay tuned with us. My favorite single malt whiskey from Scotland. Thank you for coming back, and we shall continue to go into market talk. As all of us know, 2 days ago, on Tuesday night in the Asia hours, US Federal Reserve actually surprised the market by cutting a 50 basis point interest rate of the Fed funds. But instead, the Dow Jones actually fell like one straight line and closed at 785 points lower upon closing. Then on the following day, which is Wednesday, all right, the Democrat leader Biden won 3 primary victories in North Carolina, Texas, and Kansas, and that's what they call the Super Tuesday, a market rebound. So that was actually the last night, all right, and the market closed 1,100 points higher upon closing. So today we are here thinking, is Biden going to be stronger than the attack on coronavirus and able to jumpstart the Dow Jones into a steep V recovery, as we mentioned, steep V. All right, I remember when we talk about healthy correction, all right, sometime from the October 2018 to December 2018, that was about more than a year ago. Dow Jones actually came off doing a correction from 26,900 to 21,800, all right, and that is about 18% before it made a steep V recovery. So this round, are we going to see a steep V recovery in Dow Jones, and how far can it go up to? All right, we'll come to that later. And let us continue on to the market fundamentals. And this morning, as I turned on the CNBC News, I also read that the IMF, all right, the International Monetary Fund, last night has announced a $50 billion program in order to help fight coronavirus outbreak, and with the intention of supporting all the infecting countries, okay, by supporting the economy. Currently, as of today, there are more than 90,000 confirmed cases of coronavirus patients around the world, and Tokyo Olympics in this coming June may also be postponed, all right, but it is still not known yet, and the Olympic Committee in Japan has yet to announce. If anything were to happen, most likely the delay will move into the end of this year, but that might actually crash into some other sports seasons of the US and Europe, which actually will take up a lot of viewership from this Olympics. All right, so let us watch on. Okay, I'll give a very quick run through on the market technical patterns and what I see that it will be moving to in the next 1 or 2 months, especially in March this month, all right, before we go into the third part of this podcast, which is still to show you some interesting market charts that may help you to invest better. All right, first of all, let's resume on the commentary of Dow Jones. All right, as we know from the recent high, the Dow Jones benchmark actually came off from the top, right? That's about 29,000, all right, 29,600 near to the top, and all the way down to 24,700. All right, that is about 5,000 points decline, which is quite a sharp fall, all right, with no correction, and now it is doing a steep V. So many people have been asking us, number one is, do we foresee a steep V? Or number two, do we foresee that the impact of coronavirus will continue to hit the US economy and probably cause a second round impact? All right, basically, by the Fibonacci calculation, this round, the down move is about 15 to 16%. And I think anywhere from 15 to 20% is good enough for the market to make a round turn. So temporarily, we are definitely seeing the bottom here. The only thing is whether if the market will do a sharp V rebounds, or there could be another double bottom coming up before end of this month, will be highly questionable, because tomorrow will be the first Friday of March, and we are going to foresee non-farm payroll from US market. All right, and this is something I think we truly believe that there could be some very big whipsaw at volatility if the actual figure falls below the expected numbers. All right, then of course, second thing is everybody has been predicting that the Fed will cut rate on this coming 17 March, which is the outcome of FOMC. But instead, the policymakers have done that faster than the market expectation, and there was a rate cut 2 nights ago, all right, which was on the 3rd of March. And instead of 25 basis points, the policymakers actually cut 50 basis points, which is 0.5%. This is much more, a double-degree jump, all right, than what most people expect to see. So what are we going to expect for the month of March? All right, personally, I would think that there could be a very high chance of seeing a double bottom, and the market has got a lot of time factor, okay, to do whipsaw and to pull down again. Because as I look across the market horizon now, what I could see is a lot of retailers, a lot of men in the street are beginning to go along and try to pick up this Dow Jones position or a major stock indexes. All right, that's when I think it is quite. That's why I think it is quite dangerous. All right, it's quite dangerous because the market always move against what most of the people think. Where everybody are now being fearful and taken aback by the coronavirus impact. All right, and suddenly when there's a sharp downturn and everybody started to go into the bottom and try to fish, okay, a good position, chances is we could be seeing another down move. All right, so for Dow Jones itself, basically I'm looking for a high possibility of another bottom below 25,000. All right, it may be or may not be, but if it does, I think the biggest opportunity is to pick the bottom at that time. All right, as I mentioned in the part one, we still have, well, about 3 more weeks to the end of March, and I think the high volatility and the price whipsaw could easily just make another second or third bottom, all right, for the whole of March season here. So right at the bottom here, when Dow Jones, what happened if it really falls below 25,000 benchmark? I think that's one very special instrument that you could be looking at it, because with such a good timing, you'll be able to make a recovery on 3 times the profit. And what is that? All right, stay tuned with us, and we are going to review this on the part 3 where I show you the market chart. All right, then now let's move on to the gold prices. All right, gold prices have actually done a very sharp V-pattern correction since last Friday. All right, as now we see that it is moving back to $1,640 per ounce. I personally would not be looking at a very high top for the time being, and in fact, the same as Dow Jones, I foresee that it will start to go down again and do a sideways trend for another 1 or 2 months. So for gold prices, all right, basically, I would love to put my forecast on the market price between $1,550 up to the current top $1,650. All right, if the market is not going to break above 1670, all right, most likely for the next 1 or 2 months, gold prices will go sideways between 1550 to 160, and that may actually enable you to capture a better bottom if you stay patient. All right, and WTI crude prices. All right, crude prices, I'm not having a big expectation because there's little things that OPEC group could do now. So I am looking at the overall price range, at least for the second quarter, from April onwards to June, to be trading in the range from $43 per barrel up to $50 per barrel, 43 to 50. All right. Then, of course, when we look at the US dollar index, all right, US dollar index, as I mentioned on last week's podcast, the dollar index is most likely going to weaken, and true enough, it does come down. All right, the dollar index has been traveling down from about 99 level plus down to about 97 now. But on the overall, all right, in this month of March, even to April, I'm looking for dollar index to move between 97 to 98.5. All right, about 150 points, all right, on the futures market, and that will actually trigger a lot of whipsaw in the US stock index prices. All right, but of course, when we see gold prices moving back down, that's when the US dollar index will start to come up and recover, like what it's going to do now. All right, so dollar index will be going on whipsaw, as well as gold prices go whipsaw. All right, both moving on the yo-yo trend. And the next thing we want to cover will be on bonds, which I think, well, sometime back in February, in fact, when the coronavirus started spreading from Asia, people were very worried, and there are a lot of traders that asked me saying that why they had seen the Dow Jones moving down and the gold prices moving down, the dollar index moving down, as well as the crude oil prices also moving down. So where has the fund go to? Where's the next safe haven? All right, this is what I'm going to show you now, all right, on the part 3 of this podcast, and stay tuned with us. This is a very important instrument that you're going to take a look at it, as well as another benchmark ETF, which will track 3 times the profit of Dow Jones if you happen to capture the entry when Dow Jones Index falls below 25,000 levels again. Alright, stay tuned and come to our part 3. Okay, this is the third part of today's podcast, and let us take a look at the Dow Jones benchmark market. And last night the market closed at 1,100 points higher above closing. Alright, if you look at this bottom, as I mentioned, okay, you can check out the data here on the open, high, low, close. On this day, dated, 28 February, the market went down to a low of 24,681 before it rebounds. And this is what I call a steep V recovery. Okay, a steep V recovery. As we can see here, there wasn't a steep V, and this is considered a V recovery, and this is a kind of steep V. But the last time the market had a steep V correction was here. That was in the December 21/8. Due to some market optimism and a lot of verbal remarks support from President Trump. But today, when we are putting in the impact of coronavirus, we are taking, we are very neutral, but we are taking a bet. Of course, if the market does a sharp V recovery, that'd be good. But however, as I mentioned earlier, considering that so many retail traders have been moving into the market now, there's a possibility of another pull down. And how far it will go down, I have no idea, but definitely there's a very firm support at 25,000 benchmark here, as you can see. The previous bottom here was tested in 21.9 sometime in May, end of May. But there is a possibility for the market to take another dip below 25,000 levels before it jumps up, until the end of March, as I mentioned. So if we put a hypothesis of such market pattern that might happen, what is going to happen? This is exactly what I mentioned to you earlier, on the part 2, that I want to show you something very interesting. If you look at the Dow Jones Index that comes off to 25,000 again, and you want to pick bottom, go to this market. This is an ETF. The symbol is a UDOW, listed NYSE under Pro Shares, Ultra Pro Dow 30. This is a very interesting market instrument, which is an ETF. If Dow Jones level ever comes below 25,000 again, we actually forecast that this UDOW index will travel below 80 benchmark again. But how low it will go down to, I have really no idea. It could be 75, 70, or anywhere. As long as you see the Dow Jones dipping below 25,000, it may be a very good time to pick up a couple of positions in UDOW. And the reason is, when Dow Jones reverse and start to go up north, you will realize that this UDOW will go up 3 times faster, and your profit will increase exponentially. So this is UDOW, the secret instrument that we've been talking since part 1 and part 2 of this podcast, that you would love to take a look at it now. Then the second instrument that I want all of you to take a look earlier on, as I mentioned, that a lot of people were saying, if US dollar index goes down, Dow Jones goes down, and gold, crude oil are both coming down, where could possibly be the market funds go to? This is the US Treasury Bonds ETF again, listed at NYSE. You might want to take a look at this. After year 2020, as you can see the calendar here, as all the major market index, commodities, currency index have been going down. Later date, the common traders or men in the street know that the fund have been going up, going into a lot of treasury bonds ETF, as you can see here, from 94 all the way until last night closing at 123. Okay, what might actually trigger these bond prices from going higher? Number one is when US cut rates, okay, whether it is a Fed fund rates or repo rates, all right, that will actually spike up the bond prices. And number two, of course, when everything else start to come down, the only safe haven that the international fund will start to seek haven is to go back to US Treasury. And this is a combination of all the long-term Treasury above 20-year plus tenure, all right? And best of all, this is a 2 times leverage ETF, which means the potential of the bond prices going up one step. If you come to this ETF, it will advance 2 steps. Okay, so there is a possibility and a high potential of advancing 2 steps faster. But of course, if the bond prices are coming down when you see higher interest rates slipping in the market, please do not try or have any plan to invest mid to long term in this instrument because the prices will come down. So if you look at for the whole of 2019, okay, when the US Federal Reserve have been cutting interest rate and under the pressure of President Trump that has been wanting to see a lower interest rate, and yes, indeed, the US interest rate did went down. Okay, so investing in this UBT, all right, this simple UBT on a 2 times 20-year plus US Treasury could be a good bet. All right, for the last one whole year, you could have made about 70 to 80% appreciation from 72. All right, as you can see here, the price scale 72 up to a current level of about 123. All right, so after showing the U down and the 20-year plus UBT bonds ETF, I think that is enough for today. And I hope all of you will love this podcast of DW World. All right. As usual, do 3 favors for us. Number one is go down to the bottom, leave us a comment or tell us what you want us to cover in our next session. All right. We shall try our best to prepare and give you what you want, and like us, of course. Okay. And number two, don't forget to subscribe us so you could be informed on our newest upload whenever we put out some new contents. Then, of course, number three, share with your friends or you think anyone around you may need this information or would love to learn this knowledge. Please share with them and let every one of us get better in our life and in our investment strategy. Thank you very much, and I shall talk to you again. Bye-bye.